So this video is not intended to upset any apes that hope AMC hits the moon sometime soon. In fact, it's the exact opposite. The point of this video is to sort of give you a devil's advocate from somebody who's been there and done it. Somebody who started out in the army in the UK and then built themselves up to have a relative sized portfolio which can actually provide me with an income for the rest of my life. And if you still are bullish on AMC stock, then I wish you the best. Currently, I am not sure. I am not long, in full disclosure. I just think there's a lot more to this picture on AMC stock, and there's a lot of new traders getting led to the slaughterhouse. But firstly, I just want to say that this is not financial advice in any way, shape, or form. You should do your own due diligence and make up your own mind before you make any investment decision. Now, if you are new here, please do consider subscribing and turning on the bell and help save all the Wookiees from extinction by making sure that like button is turned blue. If you want to support the channel and see my portfolio in detail, there's a Patreon link down in the description. And also, if you sign up on eToro on the pinned comment, sign up, deposit, make a trade, and you get free lifetime access to our investing chat room. But swiftly moving on to AMC stock. Now, no joke, some of you know if you're in the chat room that I have recently had a lot of time taken up with a new investment project I've got going on in the city of Budapest. I'm actually opening a shooting range and I'm going to do a video on it before the reason why I actually invested a hell of a lot of money into this and how I think it will return decent dividends. But that's besides the point. But the reason I'm actually bringing it up is on Friday, I met with a gentleman there who is a translator between us and the owners of the land, and he is heavily invested into AMC. Now, the guy himself, I'm pretty sure, doesn't know I am on YouTube and I'm going to be talking about it, so of course I'm not going to put his name in here, but he is getting led to the slaughter in my opinion. And that is because he is reading stuff on Reddit, on Twitter, and then sort of reading between the lines, trying to find a reason to buy AMC stock. I mean, it's human nature if you think about it. If you do loads of research on a stock, and at the end of it, it turns out it's not a trade or not an investment, you've just wasted your time. So it's natural human nature whenever you look at any ticker, you want to find a case for you to trade it. It's just human instinct. You don't want to waste your time researching a company that is absolutely bogus or a company that you're looking to short and it turns out it's a bull case. You want to actually find people's opinions and other viewpoints that similarly fit your own. And that's why I hope some people watch past this part of the video to try and find out the thoughts of myself and see the bear case. Now, the gentleman in question, I'm going to call him Ted for the purposes of the next couple of seconds. Now, Ted came in and he said, look, I'm in this stock. What do you think I should do? I'm currently down about 10%. And I firstly replied, that's not a lot in terms of AMC because it's quite a volatile ticker and you could easily get that 10% back in any decent push. But the big question is when I started asking, why are you in it? And he replied, short squeeze, as most people tend to do. And I asked him, what about the dilution? He came back with, well, the CEO came out and said they're not going to do the 500 million this year, which sort of really confused me a little bit. Because then I asked, what other warrants do they have? What 424Bs do they have? And he replied, what the hell's a 424B? For those of you who do not know, a 424B is a filed offering, and AMC has a hell of a lot of them, and I'll come onto them in just a second. But his hopes and dreams really were relying on the fact that the CEO said on AMC that they're not going to dilute this 500 million this year. But reality is, think about it. Why is the CEO actually wanting to raise capital? Wanting to add 500 million to the float, which would almost double the stock, and in theory, again, very loose theory, it would halve the stock price currently. Reality is it'd probably be a lot more if they did start selling that amount, because a lot of long people who have decent account sizes will be pulling funds too. And that's sort of a big concern. Now, I know that's in the future and the short squeeze could happen in the meantime. On a previous video on AMC, if you want to go and check it out, I heard in the comments, options are coming on the 17th of last month or the 21st of last month or 27th and things like that. And reality is the squeeze might have sort of happened a little bit, but nothing what anyone was hoping. So I think with AMC, you've sort of got to be very careful because they're going to dilute. And if they dilute, that means the short count goes down in percentage terms, of course, unless more shorts come in. But there's more to the picture, and again, I'm going to come onto that in just a second. But again, the CEO clearly states that he needs to raise capital, and he's trying to bargain that he won't issue them this year. He might issue them in the future after this year, but he'd like to have that safety net there so he can save the company. Now, I don't get why this is a bullish sign, because fundamentally, it means the company is starving cash and they need to have stuff ready to issue. And the CEO basically is bargaining with investors, saying, I won't use it yet if you approve it. And the investors, in my opinion, rightfully said, no, go screw yourself. but the investors might have shot themselves in the foot because they have less than 6 months cash reserves as it stands on their latest filing. And again, I'll come on to the filing in just a second. Now, excluding the 500 million which got rejected, fair enough, let's move on to what they currently have pending. Now, if you don't know what this website I'm using here, it's Flash SEC. It's an algorithmic website that basically goes through all the filings, gathers all the data and puts it in simple format for you, so you don't have to spend loads of time going through PDFs, etc. So go and check out Flash SEC. It's relatively cheap. And when you sign up, if you tell them that I sent you, you'll get a little 10% discount there. You just need to drop them an email and they'll apply it to your account. Now, if we look at what is outstanding on this company, we can see that they have about 175 million US dollars worth of shares ready to be issued at the market at any time from Goldman Sachs. That equates at the current price to around about 18 million shares at the current price of around about 9.5. There's another 71 million US dollars at the market again from Citigroup. Now, if you don't know what these basically are, they could be one of many things. They could be bridge loans. AMC could be actually settling debt with these companies by offering them shares instead of repaying the cash. And that's sort of what it means. So long story short, these two companies could sell at, in theory, on the next market day, and it would kill the stock price. But one thing's for sure, these companies will want to cash in on any pop. Now, it gets a bit more worrying here because AMC actually have 21 million shares outstanding, and they also filed another 34 million shares which need to be added before December the 14th this year. So that's a quite decent amount of shares that they're going to sell before December. I mean, why wouldn't they sell them? They're there ready to go, and the company needs cash. Like I said, they've got less than 6 months cash reserves as it stands, and selling these might give them an extra couple of months. And their most recent filing is a 43 million share lodging, which is about 10% of the current float, which again is not a good sign. I mean, if you look at a company raising shares, 10% is a decent amount of the float. And if you're waiting for a short squeeze and this stock is continuously diluting, that short squeeze is less likely to happen as more shares are pumped onto the market. Now, I spoke to Ted on the short squeeze, and there's crazy numbers being thrown out that it's like 80% shorted, over 100% shorted. But reality is, it's very hard to tell because some companies and some individuals don't disclose their short positions. But realistically, the numbers that I've seen range between 17 and a maximum of 30% from websites I've used in the past. So we can, let's just say, the worst case scenario for the bulls, there's a 30% short float. Now, there's currently about 400 million shares outstanding, which means that 30% equates to about 120 million of shares of AMC, which ironically, if we go from March, is about the same daily volume. So think about it. If it's rotating the daily volume 30% every single day, how come these shorts have not all been squeezed out yet? And again, that's another really concern for me because maybe these shorts are actually in at a really good entry point and they're not sat in pain. I mean, if I was sat in pain right now and so let's say I was short from $6, then I'd really consider selling in any push because how much pain can you take? But the difference here really is I'm just a bloke with a beard who's got a semi-decent sized investment account. When it comes to Citadel, Citigroup, and all the other hedgies, as you call them, they've got really next to unlimited cash flow. They can just keep pumping money in and sit through pain for as long as they need to. Because reality is, I'm sorry to say, AMC is really fucked. And if you don't believe that, let me put it another way. Let's say you're a hedge fund with 1% of your exposure, which is probably about right in terms of shorting for a company short into AMC. You're down, I don't know, 200% in the position. Let's go crazy. So you're down 200% in the position, which might be millions. And it sounds crazy to me and you, even billions. But to them, really, it's absolutely nothing. Now, you know the CEO has just come out and said that he needs to raise 500 million US dollars. Didn't get passed, but he's going to try again in the future. He has to if AMC is to survive. If he doesn't, AMC goes down, hedge funds win. But if he does get a 500 million passed, it's going to kill the stock price. Guess what? Hedgies win. So this is my big concern with the long future of AMC. Now, early in the video, I mentioned that they've got less than 6 months of cash reserves before they're completely screwed. And in their most recent filings, we can see that they have around just over 800 million US dollars in cash reserves sat there. Now, if you go on the current burn rate, and that includes, paying things like leasing, debt, etc., they only have 5.8 months left of cash reserves as it currently stands. Now, that math is literal fact. It's on their recent filings. What happens in 6 months? Well, they're going to have to use these offerings. They're going to have to sell shares at the market to make sure the company survives. And I think that's what people are missing when the CEO says, we will, we need to dilute. And I mean, he's really actively diluting. Just look at the share count from over a year ago. It's like crazy. It's gone from like 100 to 400 million in the space of 2 years, or even less than 2 years. So they're actively diluting and they want to go even further. And it's the only way this company can survive. And again, their debt is a big worry for me because they have 7.2 billion in debt, which needs to be paid in 5 years' time in 2026. And you're probably thinking, yeah, okay, they can cover that because they can just give it to Citigroup or Goldman like they did with the previous mentioned share offerings and just get rid of that debt. Well, no, because 6.04 billion of this debt, yes, billion, not million, is actually traditional debt, which cannot be converted into shares, which means they need to repay it somehow. So they can't convert shares to pay it off. They physically have to do the cash. So that means they have to do an offering themselves to pay off this debt or somehow raise this amount of money elsewhere. And given the fact that the debt is piling up, offerings really are the only key, which again is not a good case for the bulls or people expecting a short squeeze. Now, briefly, I want to talk about analysts on AMC. And I know you're all probably thinking, oh, hedgies, analysts, they're all the same. But look at it this way. When you get sick, who do you go and visit? You go visit a doctor. You don't tweet or post on Reddit, I broke my leg, what do I do? You go and find a doctor, someone who is qualified in that profession, studied in that profession, and more importantly, has had years of experience helping people out with a broken leg. Now, when it comes to analysts, again, these guys are qualified, experienced, and know what they're doing. And they're going against majority of people who are just on Twitter and Reddit saying, YOLO, here's a picture of an ape and a diamond. I mean, realistically, looking at it from a long-term mindset, you might win a small battle in the meantime. But long-term, you're not going to become a billionaire from going long AMC stock. Whereas these companies can actually make billions from a simple short and just sitting through the pain. It really is like Floyd Mayweather fighting Logan Paul, and I think his name's Logan or not Jake. I don't know which Paul brother, but it is really Floyd Mayweather versus one of the Paul brothers, and we know what the outcome will be. But looking at TipRanks, which is basically a company that gets all the analysts, combines them together, and tells you what the overall analysis is, it's not a good picture for a 12-month target for AMC. The lowest expert actually said that this will come in at around about $1 in the next 12 months. The highest, in fact, wasn't really to the moon that everyone's expecting. He came in at $13, which means that the average price for AMC stock with all analysts combined is coming in at $6.38 for a 12-month price target. Now, again, you don't have to trust analysts. You can do your own due diligence because this isn't financial advice. I'm just showing you what other people are saying on this ticker and also reading the facts. Now, you might go down there and say this is complete bullshit, but reality is I have actually give very little opinion here. It's all stuff you can go and read in filings or someone else's viewpoint. If you want to know my viewpoint and what I think you should do, let's look at it this way. The CEO is actively diluting. He has been for a long time. If they don't dilute, the company goes bankrupt. If they do dilute, the company survives, the CEO's done his job. But if they do dilute, the stock price is going to come down. It's that simple. You can keep YOLOing in as much as you want, but unless you've got, for example, 43 million shares times $10 or whatever it is currently now, unless you guys can come up with that amount of money, the share price is going to come down. It's just, it's fathomably impossible unless you come up with that amount of money and they dilute it for the stock to continue going up. Now, again, I know it's not the news that people want to hear, and I'm sorry for that, but I really feel there's a lot of decent people who've put their hard-earned money into companies like this, into GameStop and other crazy companies, and I hate to see new investors who are decent people lose money. So just please heed this warning. I'm not saying you should sell it. I'm not saying you should buy it. And I'm definitely 100% not saying you should short it either. I'm just saying have a price target, have a risk level, and stick to it. Either way, I hope it works out for you with AMC. For me, again, I'm not in it. So let me know your thoughts down in the comments. If you haven't done so already, save a Wookiee by hitting that like button. And I'll see you in the next one. Take care. Peace.